All right, welcome everyone. Welcome to the Hurley Investment Market View commentary for Monday, September 20th. And my first and easy question is, what is going on right now? Because I did think it was a little bit interesting that we got hit with a couple things, but what is going on right now in today's stock market? And let some answers come in. Just what's going on in today's stock market? I like it. I see a couple answers coming in. It's going down. So I might say that we're bearish and that it's usually a seasonal event, right? So we could say, plain and simple, seasonal bearish months. I like it. Did it start with China? So China worry with, and I think it's let's find out. I've got it in here somewhere. Evergrande or Evergreen. Evergrande, which is only, borrowed 300 billion for real estate. We have two more great answers. Inflation concerns. And pretty easy. I kind of think this was interesting, but the short answer is yes. And COVID at the highest levels ever in the U.S. In fact, Maud, I want to ask you about that one. For crying out loud, we all have these vaccines and we're all getting vaccinated. And Utah is at its highest levels ever. In fact, let's take a quick peek. Go to the coronavirus cases. There we go. USA doing wonderful. 2,000 a day. Where's Utah? I know Utah's hospitals are taxed beyond belief. Only 900 though. Total cases 500,000 in a 3.2 million state. Unbelievable. So, COVID. Hold on. Maud has it. This is not a true vaccine, correct, but it helps out. Vaccines take a deadly illness and make it benign, less dangerous. Thank you, Maud. Thank you. And that's what it is. It's a flu shot, right? And it's a flu shot that it's hopefully going to be helping us get through it quicker. But it's not good. Is the short answer. So the good news is, and let's put it plain and simply, right? The good news is we started protecting when? At Hurley Investments. When did we start protecting? Anyone know? Anyone take a look at their accounts? When did we start protecting? There we go. We started protecting 2 weeks ago. But this is exactly how we beat the market. So let me go through a couple things. I'm going to show you this to you in two different ways and why we're a little excited with what's going on right now. If we were to take a look, and we're just going to bring up Apple. In fact, I'm going to go to the Y charts. What am I going to go? I'm going to go to right here. Part of our problem this year, where we're not getting the returns that we got like last year, Apple finished Well, it opened, high was 134, closed at 132. 132 trading at 142. Not the best thing. It actually opened at 133. January 4th, our first day, opened at 133. Currently trading at, what is it? Currently trading at 142. So it's up $9 year to date. Yes, we've had a little bit of downward movement, but Apple's up $9 year to date. We get these runs through an earnings event, comes back down, runs through an earnings event, comes back down. For all intents and purposes, Apple has not been moving the way that we need Apple to move if we're going to collar trade. We're overpaying for protection on Apple right now. If we go to Boeing, Boeing opened up, well, it closed last day of the year, 2014. It's trading at 2009. Boeing for the year has basically gone down $5. Baidu. Thank goodness we did some protection on Baidu. But Baidu closed at 198, trading at 154. For the year, Baidu is down $44. Let's go to Disney. Disney closed at 181, trading at 178. Look how sideways Disney is. Go down $3, super sideways. Here we are doing our collar trade on a stock that we're overprotecting. We're overprotecting right now on this particular position. All right, so Disney, Ford's our one winner this year. I like how Ford has moved from $8.50 up to $12.82. Ford's a winner. If we look at Facebook, Facebook's a winner. 271 to 355. But Under Armour, 1654 to 2045. Not bad. We like that one. Visa, 217 to 220. Another $3 a movement. What we're running into this year. So what we are running into this year has been mostly stagnant stocks, which does not work well with providing protection in a buy the dip market mentality. Our collar trading's not the best when things are sideways. That will not help us out. But we are excited seeing where we're going right now with our stock market. And right now, our stock market, if I had it my way, I would love to see our stock market tank. And the reason why I'd love to see our stock market tank really comes down to some positions that we're currently in. Apple, I see no reason to get out of Apple fundamentally. We've got September 135 calls that are up $1. But more importantly, on a day like today, our shares lost $56,000. We're making up 42. We basically are making up 80% of the downward movement right now on Apple. That is where we need to be. That is a good position to be in. Bank of America. Bank of America today, we lost 36,000. We made up 21,000. We're in that 66% range area. If I can continue just to go down on some of these and show you those core holdings again. Baidu. Baidu, we lost 95,000, 92,000 on the stock. We're making up 55,000 on the way down. We're ready to see some things tank. We're ready to see some things lose some big value. Disney, 86,000 we lost on Disney shares. We made up 56,000. Almost at the 75% range. Let's see, where are we at for Facebook? For those that are in the Facebook, we lost 16,000 on Facebook. We made up 747 on the calls, 13,597. I mean, basically we're making up 14,200 on a 16,200 drop. I like where we're at. My short answer, if the market will continue to fall into a pullback or correction, we are perfectly aligned to make up 80% or more of the downward movement. And again, what do we do there? Convert to shares and hopefully have a Christmas rally. It's really that simple. This is what we're looking for this year. Because, as I showed you with those charts, some of our stocks have been up $3 year to date, or down $10 year to date, or up $10 year to date. And that's not enough movement. Someone asked me the question, Kevin, what are the dogs? And usually it's related to the dogs of the Dow Jones Industrial Average, right? Which means we have stocks that 1 year don't move, and then the next are big movers. Another way to say it, 1 year they're the losers of the market, the following year they make it up. They make up the previous year and they run into what's the market's growing that year. They are the dogs of our stock market. They're just not moving for whatever reason, and we catch it up the following year. So it's really that simple on where we're at in some of your portfolios. We just haven't had the movement. Some of the smaller accounts have done better the beginning of the year and moved quite a bit, and now we're waiting this year to see some movement coming back up. So, last question that was asked. Am I ready to make a change? And the answer is obviously heck no. There's no reason, as I went through the past weeks, there's no reason to move out of what we're in. There's no reason to change our strategy. There's no reason to go all bearish, go all out. Right now, we're just continuing to protect. and we might not see the gains for our portfolios till the last month this year. We might not even see them till the beginning of next year. But if you go to My Hurley Investment, that's singular. If you go to My Hurley Investment and go through the last 3 or 4 commentaries, I've worked all those numbers for you so that you guys can understand where our core holdings can get to, why we're in what we're in. And just because they're not moving now doesn't mean you throw the baby in the bathwater out. You stick to your methodology and it's going to come back. I'd like to give you a time frame, but statistically or fundamentally, they're going to come back as the dogs do, and they will be the outright winners for the following year. Are there any questions about what I'm trying to show you right now? Would anyone here just like to ask a question about what I just tried to show you on stocks that have been moving sideways, which when we're adding protection, it's like buying protection or insurance when you don't necessarily need it. And the fact that we're in a buy the dip mentality until here recently, boy, this could be our 20% drop, and we could really, really look to be in pretty good shape coming through the end of this year. Any questions, though, that you guys have? Kevin, when are the stocks going to move? David W., the easiest way to say that is, I don't know. If I was just trying to outguess the market, I'd have a 1 out of 3 chance of doing so. And with all due respect, you'd be in a losing methodology. If you're trying to outguess the market when it goes up, down, and sideways, 1 out of 3 chance, 33% chance of being right. I don't know. That's why we call our trade. That's why I put protection on around those earnings. That's why we started putting protection on about 2 weeks ago. And we made it. It was rather good timing through a day like today. In fact, it's pretty impressive that basically you could have about 2.5 times the losses in accounts today if it was just the stock ownership themselves. So, yes, and so I've got David W. and David. So David says, do we need to be worried about China? And the short answer is yes. I love it. Let's just put it this way. Right now, China has no intention of bailing out Evergrande, which could lead to a Lehman-like drop in China real estate and financial markets. The biggest one that's going to hit here in the US, BlackRock. And most likely Cathie Wood, right? Let's face it. And let's put hopefully Cathie Wood. Partially because she just makes these wild bets. But BlackRock is the one that will take the biggest hit if we see a Lehman-like collapse with this Evergrande. We're talking about $300 billion that'll be liquidated out of their real estate and financial markets. It's $1 trillion worth of bonds that won't be paid their interest. And it would be what, $1.2 trillion worth of collapse. In a $21 trillion market like ours, it's losing 5% of the GDP. But this is China. They print money, they make over stuff. I mean, it's I have an article to help you better understand. It would not surprise me if we saw all the gains out of the U.S. stock market disappear in the next 4 to 6 weeks. Look for a dead cat bounce tomorrow, and we'll probably continue to trend down through the rest of the week. But we are looking for a bit of a dead cat bounce tomorrow. And then I would expect the market to continue trading down for the rest of the week. And it will probably take, 2 to 4 weeks till we find our bottom. It would be ideal if we could lose 15%. If we could go through a correction, don't necessarily have to go to a bear market, but our pullback is 5 to 7%. A correction is 10% or more. A bear market would be a 20% drop. A correction in that 10 to 15% range, ideal. Evaporates all the S&P, and for us, that's going to equal 20% more shares of stock in our core holdings. So let me just put those. If I was going to say core holdings, pretty simple, right? Core holdings are Apple, Baidu, Disney, Ford, Facebook, Visa, Under Armour, using the wrong one, Under Armour, Bank of America. What core holdings am I missing? Visa, Under Armour, Bank of America, small ones. We could, well, I don't have very much JP Morgan right now. Apple, Baidu, Disney, Facebook, Visa. And you guys have typed a little bit in here. Let's see what I could be missing. Visa, Under Armour. Nope, that's about it. That's it. All right. Do you know why airlines went up? Is it about restrictions? So, airlines had an announcement that globally more airlines were expecting more passengers due to the increase of the COVID vaccine. I mean, that's what it really came down to, is that someone wrote an article that basically said, hey, airlines are expecting higher passengers or more passengers due to the increase in the COVID vaccine numbers. The bad news is this has been announced for the last year, and the numbers were coming back, but now they are back down like they were at COVID worst numbers. I mean, in all honesty, I think we're still only at 55% of the capacity we had in what, 2018? Slightly over half. We were closer to that 65 or 66, but now numbers went back down. I don't know who wrote the article, but an article was written today. Hey, airlines are expecting their numbers to go back up because of the increase in all the COVID vaccines. They've been expecting that for over a year now. It was not new news, but it did boost the airlines and help out the airlines. Not to mention, for the most part, we've been seeing oil trending back down. So with oil trending back down and the cost of fuel becoming cheaper. That is making it easier for the airlines to, I don't know, to do better. I mean, let's face it. If oil can go back down to 55 gallons a barrel, we're going to be in great shape. Someone also made the comment today about what about the debt limit being raised? And all I'm going to say is I would expect if the Democrats own the House, the Senate, and the presidency, I would expect they would get the debt ceiling raised. You'll hear all the Republicans complaining, no, we can't raise it, we can't raise it, we can't raise it. Yet we did raise it when we held the majority, or when they held the majority. I guess not we, but when the Republicans held the majority, guess what? They raised the debt ceiling. But the Democrats holding the majority, guess what? They should be able to raise the debt ceiling. It should not be an issue, but that was brought out that that it'll be that the government might shut down because of the debt limit. But obviously, they're putting things in place so that that will not occur. There was an article that came out just at the close today that I will try to put into the Thursday trade findings and adjustments. But the reality is, yeah, you you should be able to raise the debt limit ceiling. That shouldn't be a problem. Any other questions about what I've discussed to try to help you better understand your portfolio? I did. Do the buy dip at support, or is there more defined technical analysis? It's usually at the support, but usually the buy the dip this year has come one bad day or a trending week or two, and it goes right back up. We also had some buy the dip mentality on the day where our markets were down 300, 400, 500 points that day and then finished flat. So it's definitely been a buy the dip type of mentality this year in our stock market. We've had buy the dip after some poor earnings. So it's just in general, our markets have had a buy the dip mentality. I don't know if there's a specific way or time. You see it over a period of time, and it's just been that type of mentality for the year. Good question. Any other questions? I knew you'd do it. Mary, why is Ford not protected? Ford is not protected because we should have protected it on Friday, back up at the 50-day. But since it passed above the 50-day, we were seeing if it would break out on the 50-day. It did not today, but unfortunately today it came all the way back down at 1262 mark, which seems to be its level of support, and it bounced higher. We did not protect Ford. We do not have Ford protected because over the last week or 2 weeks, it's actually moved higher. Friday, it broke above the 50-day, so we were waiting to see that continued price action up, and of course it fell today. So that is why Ford is not protected as a core holding, because of the technical analysis and what we saw Friday. Great question, Mary. Any other questions in general about what I just went over? So just to put a conclusion, a 10% correction from here gives us 10 to 20% more shares of stock for a Christmas rally into the end of the year. Perfect. And then we'll be, good to go from there. All right. I will have another question section, but let me go through some more stuff that I have for you guys. A big picture. Again, it's pretty interesting. A different take on its quitting time. Why do we have 8 million unemployed people with over 10.2 million jobs available? The big picture from thebriefing.com gave a great understanding of our job market right now. And of course, what they're trying to say is, hey, people right now are looking for a better opportunity. It's amazing. And I'm going to say this tongue in cheek, so please don't get mad at me. Unskilled labor has a huge opportunity to get overpaid for their work. I'm talking about flipping burgers. I'm talking about working at minimum wage jobs or slightly above minimum wage jobs. Unskilled labor that doesn't take any special training to do a whole lot of. Counting dollar bills as bank tellers. I don't want to go through, waiters, servers, bartenders. I don't want to go through a bunch of examples, but unskilled labor has some pricing power. Unskilled labor has the ability to make more money than probably that type of labor has ever made before. And it's a very interesting article for you guys to read through that basically says, hey, they have some pricing power. There's opportunities as they're quitting, trying to find better paying jobs. Really, this is the time when unskilled labor or low skilled labor is getting college paid for. They're getting perks for their labor that to a certain degree typically is not offered. It's usually offered for the higher paying jobs where you've had to go to 4, 6, 8 years of school, 2 years of study to get licensed. It's pretty neat for the opportunity that this lower skilled labor has. Please read through the article. It's very interesting, but basically low skilled labor or unskilled labor has pricing power right now, and they're looking for better opportunities. It'll be interesting to see where it ends up. Market recap. S&P is now down 2% for September. I disagree with those numbers. I don't have it up 18% for the year. I have it up 17% for the year. I guess if you want to count in dividends, you can count in 18.5%. A lot of sectors are tumbling. Pretty neat to see 3 weeks in a row of the S&P down, and pretty neat to see the opportunity that how would I say this? See the opportunity to make a correction in our market that's been overpriced. I really put this in here because it talked about Ford. Among consumer discretionary stocks, shares of Ford Motor gained 6.9% last week as automakers said it'll invest an additional $250 million and add 450 jobs to raise its annual production capacity to 80,000 all-electric trucks amid higher than expected demand for its F-150 Lightning. Pretty neat to see. Earnings Thursday after the market closed, we have Costco. The Dow Jones Industrial Average is bearish, but it's just touching oversold. It is oversold, and the Williams percent are. Again, expect some kind of dead cat bounce or a slight update tomorrow. It would not surprise me to see us touch the 33,186 on the Dow Jones Industrial Average as we find support at a lower level where it becomes more attractive for those 33 to 36 stocks. S&P, it is now bearish. Second week in a row, we broke the 50-day. Notice how we held the S2 pivot point exactly. We'll probably come up and test 44.36. But my expectation the next month, wouldn't surprise me if we tested the 4,100 range or dropped roughly 10% on the S&P 500. The NASDAQ, one of the hardest hit today, broke the 50-day, yet it also held its S1. Would not surprise me to see it go up 100 points tomorrow, flirt with the 50-day, and then don't be surprised if we see a 13,856 on our NASDAQ. All I'm doing is looking at technical analysis. It is not rocket science. We've been moving this year on lower year-over-year S&P 500 earnings. We should not be up the 17% that we are year to date. Why not bring it back down? Where will S&P end in 2021? I'm going to say down 2%. Earnings were Lennar, which were bad. AutoZone tomorrow, Adobe, FedEx. Fuller Homes, KB Homes on Wednesday. Costco is a big one that we're going to pay attention to on Thursday. As for economic reports, building permits and housing starts should be good tomorrow. Existing homes on Wednesday with the FOMC rate decision. Obviously, they're not going to be raising rates. We're going to be looking for and paying attention to when they're going to be stopping the bond buying. Leading indicators on Thursday, new home sales on Friday. It's all about houses and things look good right now. I did not look at anything internationally. I think we can push that off because we're going to be worried about our own market. Long put protection has been added and has been added over the 2 weeks. We were able to catch or jump a little bit ahead of the seasonal downward movement. All right. Kind of funny. There it is. Kathy Wood. I spelled her name wrong. Let me go spell it the right way. Kathy Wood. New theory. Rather interesting. The generational theory espoused by Tom Lee and Kathy Wood. They could drive the bull market decades into the future. Millennials. Since millennials are not buying houses, they're not staying put, they're spending very little, they're living in cars. Apparently, a lot of their money is going into the stock market. So, as they get older and they diversify more and become more like us old people, the short answer is the bull market may extend into 2026 or even to 2038 as millennials build out their investment portfolios. I'm not one to jump on to this nonsense. I don't think millennials have really affected our stock market. I think more so it's been the government and the fact that we're printing money out of our ears and we're devaluing the value of the dollar. Let's face it, we're going to lose our reserve currency status sometime in the near future, but this is something that's rather interesting to read about. One thing about the millennials, though, is the coins. To them, Bitcoin or cryptocurrency is huge. Took a huge hit today. A lot of this Evergrande has been purchased and basically their money's run through cryptocurrencies. I think cryptocurrency through millennials is a fad, but it's one that could extend into the future. So it is something to pay attention to. I found an article on the Delta variant is causing many Americans to lose income. Here's what you do if you're one of them. Of course, there's a program in the government that we can pay for those that are not working due to this Delta variant. It's starting to hit home right now. I've got a really good friend who is in the hospital with the Delta variant, COVID, and pneumonia. His outlook is not looking good. At 66 years old, it's a little scary that when you have someone that you know get hit with this and not bouncing back like the rest of us. So just an interesting article on basically Delta variant, the numbers that it's doing, and what the government's doing to help those that need that work. Ray Dalio says if Bitcoin is really successful, regulators will kill it. I'm sorry. I guess I had to put one negative cryptocurrency article in here just to go and read through it. A little bit on Apple announces new products. That's where we discuss what it means for the stock. This is pretty bullish on Apple. For myself personally, I'm not too impressed with their phone. Better camera, a little bit faster. The naked eye can't tell the difference in the better camera. A little faster is not really significant. The big push is going to be the battery time, and that's something that truly is unproven. It's just numbers that they think the battery time will be, but I was unimpressed with the Apple 13. Interesting article on these undervalued inflation-proof assets could outperform in the fourth quarter. I really enjoyed this one because, again, it talked about cryptocurrency, but it came on my radar because of the Newmont mining. I have had a client that's really loved Newmont gold and silver. It has not been a store of value against inflation, at least not this year. In fact, gold and silver, for the most part, have been unimpressive. And here's a couple ideas on other things that might be able to work. China faces Lehman moment with evergreen collapse. I'm not spelling Lehman right up here either. I just put the article in here so that you guys could go ahead and read what I was reading about Evergrande and what they are, how deep it goes. Feel free to spend some time reading through this so you can understand what the talking heads are talking about when it comes to China. Really, what it comes down to is the Chinese government doesn't look like they're going to bail out a Western capitalism type of company. Great article on these banks hedge and earn 10% plus. Why we were in Bank of America and why we're in JP Morgan. They included Wells Fargo. But here's what we were trying to explain by a higher interest rate creates strong growth for the banks that we're currently in. Do read through this to better understand how interest rates and banks are making their money and how it's going to help at least Bank of America, the ones that we're in. And the last one, at the second Fed tapers any guy, it's time for investors to get defensive. This was our heads up that, hey, we need to be defensive because Keeve and I realized, hey, we're looking at tapering and you got to remember the past history. This is why we started to do a little bit of protecting 2 weeks ago. It all was spurred on by tapering and the fear that we're going to have a taper tantrum. All right. I'm going to ignore that one right there. So what questions do you guys have for me that I can try to answer for you or with you? What questions can I possibly answer that can help you guys better understand what your portfolio is doing and what we're trying to do at Hurley Investments to protect your money? So great question, Mary. Kevin, is it possible you will add a second set of puts? And the answer is yes. There are some positions right now that plain and simple, if we look at Apple and break that 140 level, we will most likely add another set of puts on Apple down to the 133 level. Baidu, we're looking at 150. If it breaks 150, we'll have $15 to the downside at 135. Kind of our numbers to look at there. Boeing breaks 200. We're going to add it on as it'll go down to 190. Ford, if Ford breaks 1250, probably down to $11. We'll add a set of puts on Ford there, or a double up on puts right there. Under Armour's a big one. It breaks 20, 1850. We'll add a second set of puts at 20 on Under Armour. I did do Baidu. Disney, that's the other one I'm forgetting. Disney, we're paying attention. It's really 170. It breaks 170, 152 or 153 is the next one on the way down. That will add more protection at that point. So yes, we are looking at adding more protection as needed. Any other questions you guys have? If not, looks like we're going to call tonight. I appreciate you guys being with me today for, again, another 50 minutes. I hope this was helpful in helping you understand what we're doing and why, how we've been through this year. Don't hesitate if you'd like to ask a personal question in regards to your portfolio. You can always email me at kevinhurley@hurleyinvestments.com. Guys, have a wonderful evening. I appreciate you being here tonight. I do hope this was helpful for you, and I look forward to seeing you next week. Good night, everyone.